Hi, Karen Deis here, and this is the January 2016 Mortgage Rule and Regulation Update from Mortgage Currency. So in this issue, you're going to find 9 articles, but most of them are talking about compliance issues with the agencies. So I don't bore you right off the bat. I'd like to start out with the USDA announcement that if you don't submit a file in the exact stacking order outlined by their checklist, you're going to get your files kicked back and they're going to go to the back of the line. So here's the thing. This rule's been in effect for about a year now, but evidently the regional officers were letting it slide. So now they really want you to know that you have to go by that stacking order. There is a form on the website for subscribers to download. So another USDA update is allowing brokers and correspondent lenders to access the GUS underwriting system. Now, we believe it was implemented to help increase access for more zero down borrowers. So if you would like to participate, read this article with the do's and don'ts on how to get set up as a lender agent. Now, have you originated any HomeReady program loans yet? Now, Fannie keeps rolling out supporting documents, and we just found this website link that is really awesome. In fact, it's an interactive map where lenders can actually type in the address of the property and determine what the AMI income limits are. They'll automatically pop up. So keep this handy link that we have in this article. So when you have a client that comes in or a real estate agent that lists a home, you can determine if they are in a HomeReady income area. And one more thing, if you submit a loan based on a 97% LTV using the standard Fannie Mae program, DU is going to issue you a finding that says, hey, maybe these people qualify for HomeReady as well. So it's pretty intuitive when it comes to the HomeReady program, which the underwriting rules are a little bit, in fact, a lot less strict than the 97%. So just a couple updates I'd like to mention about the compliance portion of it. If you originate Freddie Home Possible loans, they are changing their delivery fees, but it won't be till July of 2016. And as an originator, if you do originate manufactured homes, there are new MI requirements that you need to know about that have already gone into effect. Now, this may be mostly for underwriting department, but Freddie has updated their feedback messages. In fact, there's a new chart that you can download. And just a reminder, one of the biggie changes is that Freddie has removed the requirement to show stocks, bonds, and mutual funds that don't have to be liquidated if the combined value of these assets is at least 20% or greater than the assets needed to close the loan. Now, in regards to Fannie, this is again mostly underwriting too, but there's some updates to their collateral underwriting system where appraisals are monitored for discrepancies. So what CU does is compare appraisals to other appraisals in that area, and if underwriting receives a red flag message, further documentation might be required, or they may have to get in touch with the appraiser. Now, CU, collateral underwriting, is going to be huge because over time, they're going to create a huge database with property information, and they're going to discover problems and issues and weed out the bad appraisers, and will also be watching for fraud. So one thing I'd like to mention, one more thing about the mortgage talking points. So when a rule changes, and it's a rule that affects real estate agents that they also need to know about when they're working with their clients or listing properties, that we rewrite it for our subscribers in real estate language so it's easy for them to understand. We also make sure that when we write it for our subscribers that they are compliant with all the social media and advertising rules. So subscribers can use them in sales meetings, they can copy and paste it, put it in the body of an email, use it on a blog, website, could even use it as a video script. So thank you so much for viewing this video with the January 2016 issue. And remember that getting a loan approved and closed these days is rocket science.